All right, buenos dias, folks. Bonjour, bonjour. Good day. There is a lot to talk about with Cardano. So in this video, I'm going to run through some technical analysis, talk about what is happening, both short-term and long-term. So if you like the sound of that, please like, subscribe, comment, share, and hit that bell icon to be notified of new uploads. And look, I'll tell you why. If we look back over here, I was ringing the alarm bells right over here, folks, right at about 40 cents. I was saying Cardano broke out bullishly out of this massive ascending triangle that we were in. We were very likely to explode, very likely to hit 60 cents, and I was wrong, I suppose, because we hit nearly $1. Folks, like, subscribe, comment, share, hit that bell icon to notify new uploads. We've been killing it in terms of calling important support and resistance and price targets. So, folks, let's delve into what I see happening right now. Well, I've drawn a few key support and resistance areas that I think Cardano is reacting off of. Okay, and we seem to be breaking out bullishly out of a few support and resistance lines here. If we kind of draw from this peak to this here, we seem to be breaking out bullishly, although we do have sideways resistance at kind of like the 96 cent region. So 96 is going to be a very critical area to look out for, as well. Obviously all-time highs at about 99 cents, just under $1. But we can see here how many times we wicked off 96. 96 is clearly price reactive, and here once again. So we seem to be breaking out bullshit of this ascending triangle, but I do believe we're in kind of this pitchfork formation that I do think is valid, kind of based off the macro impulse here. And then we take the way you draw a pitchfork is basically you take the bottom of the impulse at the top and then the retracement, and that gives you some lines that you're very likely to find support and resistance out of. And we can clearly see how we're kind of getting rejected off the green support zone for in this pitchfork here. So if we continue to get rejected off these regions here, and kind of like the 92 cent region, because there's a lot of volume being built up in 90 cents, I do think we have a good chance of falling back down or kind of retesting the breakout point. Maybe this green box zone here, just under 88 cents and below, in kind of the lower extremities of this pitchfork here. 88 cents is where I would begin to look into accumulating, ADA, to be honest, like kind of, yeah, from 88.1 to 86 cents, 86.5 is where I'd be personally looking to accumulate Cardano, because there's a few very, very important catalysts quickly approaching for Cardano that we will talk about. Actually, before I delve into that, I kind of want to run through our indicators just to get a sense of the macro trend, because there's a few nuances that I kind of want to discuss with you guys and run through with Cardano. So to begin by looking at the daily for Cardano actually looks quite bearish. MACD on the way down, weighted MACD bearish crossover on the way down, stochastic RSI on the way down, RSI in the overbought region on the way down on the daily. Very, very bearish, very bearish. Now, if we look at the 12-hour, we're starting to see some signs of some strength. Stochastic RSI oversold, bullish crossover on the way up. Weighted MACD, bullish crossover. Regular MACD, histogram starting to tick up. So 12-hour is where we're starting to see some signs of some strength. Let's take a look at the 6. Ooh, 6-hour bullish crossover in the MACD. Good to see. Weighted MACD on the way up. Stochastic RSI, overbought, bearish crossover. Not very good to see. Although, I wonder, yeah, I think we're getting... Are we getting bullish divergence? Not quite yet. We're getting some sort of, yeah, we're getting some kind of bullish divergence on the RSI, but there's multiple resistance layers for the RSI. If and when we can get above kind of this red line for the RSI, I think it's going to be very bullish for Cardano. So, 6-hour, we're not really getting a confluence of reasons, although we are getting some signs of some strength. Ooh, look at that, MACD taken down. Weighted MACD, is that a, yeah, bearish crossover in the weighted MACD. Stochastic RSI doesn't want to go down. We're not getting a confluence of reasons. I don't like saying this, because whenever we get multiple, different indicators pointing in different directions, you can't be very confident of direction here. So, yeah, see, so the stochastic RSI is great, although it's giving me confusion right now, because look, it's good for understanding when you're going to have a shift in the trend. It typically moves from oversold to overbought, one extreme to the other, one extreme up top to oversold. So whenever we're in the one extreme, the overbought territory, and we're supposed to go for that leg down, and we don't, while we're going for that leg down, we have a bullish crossover and don't want to go all the way down to the next extreme. It's telling you direction doesn't want to go that way. So this is actually pretty bullish. The fact that we tried to have a leg down, had a bullish crossover, went back up, had a bearish crossover afterwards, and we're now curving, and then we might have a bullish crossover soon. So that's telling me direction doesn't really want to go back down. But Weighted MACD and MACD look bearish, but then the RSI kind of looks bullish. So kind of getting bearish divergence, higher highs and higher lows in the RSI. So I'm not getting a confluence of reasons. Let's take a look at the 2. Yeah, 2-hour bearish crossover. Let's look at the 1. And then the 1, we're starting to move up. Yeah, so let's kind of summarize what we see here. Okay, the larger time frames are really all over the place, folks. Daily is bearish, 12-hour looks bullish, and then the lower hourlies can't really decide what they want. Ultimately, in this kind of situation, I think it's more important to look at kind of key support and resistance areas. And something to note here is we did break out from this descending triangle, which is bullish, but we have strong resistance above us at 96 cents and at all-time highs at kind of like 99 cents, $1. If and when we can get above these key resistance areas, 96 cents to $1, I do believe we have a good chance of tackling previous peaks from kind of $1.15 to, I'd say, $1.12. Those were previous price reactive regions from back in 2018. If we can zoom out and take a look, and I'll show you guys what I'm talking about here. So let's see if we can actually see the specific peaks I'm talking about. Yeah, okay, so yeah, see, based off this wick right here and this body close right here, I do believe these are going to be pretty price reactive zones. So that's where I've drawn resistance. And also at all-time highs over here, I believe we're likely to meet resistance as well. Now, folks, something very interesting that you need to be aware of that's an off-chart factor is the fact that Cardano is going to be launching a giant update soon, which is the launch of their mainnet Goguen. I know some people saying, "Oh, they've already launched their mainnet." No, they haven't. Okay, they're releasing their smart contract. Cardano is releasing smart contracts soon. This is a big deal. They are expected to release smart contracts before the end before Q1 Q1 2021. March 2021 is when we can expect the launch of Goguen and smart contracts. That is a giant bullish catalyst. I've been saying for a while, I wouldn't be the least bit surprised if we have an anticipatory run up leading to the launch of smart contracts, because that's a huge deal for Cardano. So we may get rejected off these regions. We may have short-term pullbacks and consolidation here in the short term, but one of the biggest catalysts ever for Cardano is quickly approaching. So, as a long-term investor, I'm not at all worried if we get more of an extended pullback, more of an extended correction, because I understand that there's a major catalyst, one of the biggest catalysts for Cardano, maybe even ever, is quickly approaching, a few months away. So I'm not going to get shaken out if we correct or consolidate further. You guys do you. I'm not a financial advisor. It's important you come up with your own trading strategies and your own investment plans. Okay, I have a high risk tolerance. Other people may not. So just be aware. Also, I kind of want to talk about, I want to hover on the 6-hour time frame for a moment here, because I believe the 6-hour is the most important time frame in terms of understanding key support levels, and I'll tell you why. When we dumped, we found support on the 50 simple moving average on the 6-hour, and previously in the past here, okay, last time we dumped, found support on the 100 EMA on the 6-hour, dumped, found support on the 100 EMA in the 6-hour, dumped, found support there. So the 100 EMA on the 6-hour and the 50 simple moving average on the 6-hour are extremely relevant, extremely important support levels for Cardano. The 50 simple moving average is currently at about 83 cents for Cardano. In the 100 EMA is currently at about let's say some time passes on, I would say it's nearing the key support level of 68 to 70 cents. Okay, I think if we start to break below the 100 EMA on the 6-hour, we need to be worried. That is very bad news bears, very no bueno. If we start to break below that and close below that, I think Cardano is no longer short-term bullish. And when I talk about these short-term pullbacks, this short-term potential bearishness, it is just that. It's short term, because we have a giant catalyst quickly approaching, and I personally think this is just the beginning of the bull run. I think this bull run is likely to end with Bitcoin September, October this year, and Cardano and the altcoins are likely to reach their peak, I'd say maybe roughly a month after Bitcoin, given that Ethereum and the altcoins reached their peak a month after Bitcoin last cycle. So I wager that something similar could possibly happen this cycle, where Cardano reaches its peak roughly a month after Bitcoin, and And yeah, that's when I think Cardano has a good chance of reaching its peak. If you guys join our Discord group, link for that will be down in the description below. We have a resources section where we have posted a chart by Trading Shot, who does a very good job of breaking down the Bitcoin cycles. Bitcoin basically moves in 4-year cycles based off the halvings. And so that's why I say Bitcoin is likely to reach its peak September, October this year. And so I'm not going to be scaling out, I'm not going to be scaling out until late third quarter, early fourth quarter this year. I highly suggest you guys consider such a strategy, because I do think this is just the beginning of the bull run, even if we have an extended pullback. If we have a pullback here in the short term, I think kind of 88.5 to 86 cents is where Cardano finds support. That's where I would start to be placing my buy orders if we have a bit of a pullback. If that cannot hold, I do believe we're touching the 50 simple moving average on the 6 hour, currently at about 82.3 cents. That's where I would be looking dollar cost average. And if this area cannot hold here, I do believe we're very likely to test 70 cents to, I'd say, 68 cents, but more importantly, the 100 EMA on the 6 hour. If we fell down to those regions, I would personally consider that a blessing. That is definitely where I would be placing buy orders if I were so inclined, because again, I do think over the long term, this market we haven't even seen anything yet. And another thing to consider as well is every cycle, the top coins reach their all-time highs and vastly surpass it. Cardano's all-time highs is like $1.30 around there. We still haven't even reached all-time highs for Cardano. We still haven't even entered price discovery. So I mean, as a long-term investor, I feel fine, because I understand that these short-term volatility, these short-term potential pullbacks are nothing. And another thing to consider as well, folks, if indeed we cannot continue to make higher highs and we make a lower high here, that is actually pretty bearish, especially after a massive run up and we cannot make a higher high and we make a lower high. We could enter potentially some kind of extended consolidation / pullback phase. I see a lot of coins make a similar price structure after having massive run-ups, where we have a massive run-up, make a lower high, and then enter a consolidated, an extended consolidation phase, where after we break all-time highs and then pump. And I see this play out over different time frames on different scales, and Cardano could definitely do something similar, where if we cannot make a higher high here and we continue to get rejected, we can enter some kind of extended consolidation and pullback phase. But again, I do believe that is just short-term. We still have a major catalyst a few months away. This bull run is still in its early phases, in my opinion. We still have a lot of months left, a better part of a year left before this bull run is over. And we still haven't tackled. We're still not past all-time highs. So I still think Cardano has a lot of fuel in its tank over the long term. Now, over the long term, I have no idea how high these coins can go. Nobody has any idea. These are all guesstimates for fun. But I do think over the long term, Cardano has a good chance, in my opinion, of reaching, I'd say between $5 and $10. So somewhere in the dollars range it makes a lot of sense in my most humble of opinions. I'd say I've known, because look, I'm scaling out more based off time frames and less so based off prices, folks. Because you just take whatever the market gives you, right? I think I have a pretty good idea of when the market is likely to reach some kind of peak, and so I'm going to be selling around that time, and then whatever the market happens to give me, whether that's $3, $5, and $10, that's when I'll happen to sell. I think selling based off time frames and less so based off price targets is probably the better approach. It's the approach I'm taking. But hey, I'm not a financial advisor. These videos are not financial advice. You do whatever you feel is best for yourself. Another strategy that people can implement, a risk management strategy that I think could be helpful for a lot of people, which is if you've been in Cardano for a long time, if you're in profit, if it's not a 2x, a 5x, a 10x, whatever it is, you could always take your initial investment out, and that way everything you're playing with is just pure profit. It doesn't matter what happens. So let's say you invested $1,000 back over here, and let's just say it's done a 2x. Well, you could take $1,000 out because that was your initial investment worth, and then leave $1,000 in, and that's all profit. And that way you don't care what happens because you're basically playing with you're playing with the house's money, right? So that's just something worth considering for you folks who are kind of risk averse. So if anything further interesting happens, we'll definitely be talking about it in our Discord group. Links to that will be down in the description below. Now, before I wrap up, I would be remiss if I didn't mention this, is the Bitcoin dominance chart. I always keep saying this because it's a good gauge. It is a good gauge to try to understand what the altcoins have within them, okay? Whenever Bitcoin dominance rises, altcoins typically suffer. Whenever it falls, altcoins typically benefit. For those who don't know, Bitcoin dominance is the total value of Bitcoin in comparison to the total value of all cryptocurrency. So right now, these last few days we've been having kind of a rally with Bitcoin dominance. I put the Hakanashi candles up here so you guys can clearly get a sense of the trend better. So we've been having a bit of a run up, which makes sense. The altcoins have been not really pumping, having a bit of a, well, they've been correcting for sure the last few days, but it's currently kind of going for a little bit of a leg down. If we continue to see Bitcoin over the next few days fall, that should tell you the altcoins have more gas in their tank to pump. If we see Bitcoin dominance continue to rally, that should tell you that's going to place the dampers on the altcoins. So it's a very interesting, very important chart to keep an eye out for, trying to understand what the market as a whole has a good chance of doing. And obviously Bitcoin. If Bitcoin decides to absolutely explode quickly, that's going to place the dampers on the altcoins. If Bitcoin decides to swan dive into nothingness and crash, that is going to place the dampers on the altcoins. So these are some of the important things to look out for, folks. Check out our Patreon. Link for that will be down in the description below. You get access to our VIP Discord group where we talk about our low cap gems, interesting setups. You guys can take a look. We've had gorgeous setups. So check that out. Link down in the description below. We appreciate anyone who supports us in whatever way they do. Thank you for watching. Take care.